As Americans grapple with an uncertain economic landscape, credit scores are becoming a concern. 23% of Americans say a lack of credit or bad credit interferes with reaching their financial goals. This is according to a survey from the Harris poll. NerdWallet is looking to change that with the launch of its first consumer product, NerdUp, a credit card to help consumers boost their credit. I want to bring in Tim Chen. He's NerdWallet's CEO, joining us now. Tim, it's great to see you. Lots to talk about when it comes to the new product that you're offering. But first, I just want to zoom out a little bit and get your thoughts and your perspective on what we're seeing more broadly with the consumer. Because when you take a look at some of the trends that we've seen over the last several months, does point to the fact that maybe consumers are weakening just a bit. When you take a look at delinquencies rising, auto loan delinquencies rising, as well as credit card delinquencies. What are you seeing on your platform? What's your read of the consumer?
Yeah, the consumer is certainly facing mounting challenges. I think what we're seeing right now is really a normalization to pre-COVID levels in terms of some of the challenges we're facing. But yeah, certainly as we look forward, we continue to be a little bit concerned as, student loan payments are coming back and it's getting tougher to get loans from banks. Insurance is getting a little more challenging given the inflationary environment. And we just really want to be there to help support users with the best information as it comes out.
Tim Chen, when you hear of conversations where higher for longer gets tossed around from the Fed, or even shallow or a mild recession, how do you translate that? How does that kind of transition over into your thought process, especially around what that means for credit scores and what products like NerdUp could mean for the significance of people trying to protect their credit scores?
So the thing to remember is that banks loan money, right? And higher for longer actually challenges banks a bit. It makes it more expensive for them on the depository side. It makes it a little bit challenging for them for the SVB-like reasons on the lending side. So they're getting a little more conservative, which means it's harder to get a loan now than it was 7-8 months ago. And so that really speaks to why we thought it was an important time to launch NerdUp. Traditionally, credit card companies make money on things like swipe fees, annual fees, late fees, and charging interest on balances. And a lot of people can't even get credit cards in the first place. So a secured credit card is really a stepping stone into unsecured credit. And we thought we could offer it at really good economic terms because we're already seeing millions of people come to NerdWallet looking for credit. We thought it'd be a great way to segue them into an unsecured product in the future.
So, Tim, when it comes to the goal and how this fits in with your strategy at NerdWallet, how do you see this new card helping fuel some of that future growth at NerdWallet?
Right. So we really want to register users, engage them, and help them improve their credit score. So after 6-12 months, the hope is really that people will start establishing a credit history. I think people, especially like new immigrants, recent college grads, people with damaged credit, getting back into the system can make a big impact. Credit scores are essential in everything from getting a good car insurance rate to applying for an apartment to getting a credit card or a mortgage or a loan. And so this product really helps bridge a big missing piece of what we were seeing a lot of our users struggle with.
What are you seeing and observing in the trends of how often people are tapping credit right now as household balance sheets are certainly under some very scrutinous spending and patterns and habits right now?
Right. Yeah. So there's definitely you're seeing pretty broad trends coming out of all the pandemic stimulus that families benefited from. You're seeing declining savings rates, especially in the more challenged part of the populations. Right. You're also seeing increasing delinquency rates, increasing charge-off rates. That being said, it's important to really zoom out and look at this from the context of the past few decades. We're really normalizing towards more normal trends after a period of a very, very, very strong consumer. Things are still relatively strong on a multi-decade basis.
Tim, when it comes to where consumers are spending, how they're spending their money, what are some of the trends that you're noticing?
Yeah, so we're certainly seeing a ton of interest still in areas like travel, in areas like credit cards, personal loans. And then on the other side, consumers are really seeing the benefits of getting a new high yield savings accounts right now, right? Like long-term rates closing in on over 5% means that you're going to get some really attractive depository rates for the first time in a couple of years. And so both of those are top of mind for consumers right now.
What is the most necessary thing, not just from some of the regulators or policy makers, I should say, but also from businesses in terms of how they're engaging with consumers that can be done to make sure that credit scores on the other side of any recession, or perhaps in the best case, we see a soft landing that means no recession. What's the best thing that can be done to make sure that credit scores aren't so damaged on the other side of that?
Right. So, yeah, we also have a small business product where we really help small business owners do things like look for loans. And, so it's definitely a population that we think about regularly. I think it's very important to help consumers choose between different methods of paying for products, as well as to help them assess their different options. So, it's something we think about a lot.
In assessing the options of how people are spending and even which credit cards they're pulling out of the purse or wallet when they go to make a purchase, sometimes the rewards come into play, especially during a time like this. And in this environment, what are you expecting on that rewards front from what businesses are putting forward?
Yeah, so, credit card rewards have been getting increasingly competitive, which is a really positive dynamic for consumers for, past 5 years. So, credit card companies are really giving most of it back right now in terms of things like 2% cash back or big sign up bonuses or, other really strong incentives for variable spending. And so that continues to be something we really encourage consumers to take advantage of. And then, of course, we've got the advent of buy now, pay later. And so there's just a lot of options out there. We definitely encourage consumers to track their budget via a 50-30-20 budget. 50% for their needs, 50% for their wants, needs, et cetera. And so we can really help you track that with our app and budgeting tools.
Tim Chen, NerdWallet CEO, always a pleasure to get some of your insights on where the consumer is spending. Tim, great to have you on the show here with us today. Appreciate it.
Thanks for having me.